The Central Bank of Nigeria's decision to classify a 540 billion naira 20-year term loan as Tier 1 capital in a distressed bank merger has sparked intense debate. Analysts are questioning the accounting adjustments that made the deal possible and whether such a loan truly classifies as permanent capital. While some see the move as a lifeline to stabilize fragile institutions, others warn it may set a risky precedent for future mergers. Concerns also linger about classifying repayable debt as Tier 2 capital and the potential distortion of regulatory standards. The development raises a crucial question. Is this regulatory innovation or desperation? Joining me for the conversation is Nabila Mohammed, research analyst at Chapel Hill Denham. Thank you for joining us, Nabila.
Thank you for having me. Good morning.
Good morning. Let's begin. I would appreciate if you could walk us through all the expedient accounting necessary to make the figure work for this sort of business combination or merger.
So to start with, let me put it out there that it is this figure around 540 billion being classified as a Tier 1 capital is largely speculative because the CBN on its own has not publicly announced the terms and conditions for this financial accommodation. Now, yes, last year they did mention that they were going to financially support the merger between Unity and Providence Bank, and the merger is contingent upon the financial accommodation of around 700 billion, which was what was announced at that last year. Now, following that announcement that was contained in the circular dated August 4th, 2024, we have not seen a public announcement from the CBN giving us additional information on how they intend to classify this. And now, in my view, to answer your question with regards to how the CBN's accounting necessities that would follow, it will not be devoid of following the IFRS standards, that is the International Financial Reporting Standards. So, however, they are going to provide that financial accommodation to Unity Bank and Providence, that's the two entities that are intending to merge, it will definitely be backed by the IFRS standards. And it is largely because the CBN, over the past two, at least since this new CBN administration, has built a reputable image that would not want to be thwarted upon this particular transaction. So they wouldn't want to go off what is already stipulated and guided across the globe, which is the IFRS standard. So whatever accounting measures they are going to apply, however the conditions and terms are going to be stipulated, it will be largely supported by what the IFRS standard requires of accounting practices, whether it's in terms of business operations, whether it's in terms of loan obligations or settling loan obligations for the bank, or even coming in to support that financial institution. All these will definitely be guided by standards, as I earlier mentioned.
All right. So, I mean, you're saying that they will stick to global standard. Time will indeed tell. But there are also questions around the implications of classifying a 20-year term loan as Tier 1 capital. Does this in some way redefine what permanent capital means within banking?
The permanent capital will continue to remain what we call the Tier 1 capital, and it's largely the share capital, the share premium, the retained earnings, or what we would like to call general reserves of the company or the entity involved, and other statutory reserves as may be defined by the Central Bank of Nigeria. So reclassifying a loan does not really fall on one capital. So it will not necessarily fall in that category. As I said, the terms and conditions should be something that the CBN would be able to publicly put out there as regards how this particular financial accommodation will play out. And this is not even the first time that CBN is providing a financial accommodation facility to Unity Bank in particular. I think sometime between 2019 and 2020, they got a financial accommodation facility as part of the forbearance that CBN gives to banks of around 50 billion that was meant to be repaid. So this particular event of CBN coming to financially accommodate just to support and bring reduce liquidity pressures that the bank is facing is not the first time we're seeing it. Yes, the amount this time is big because there's a merger transaction involved, but it is not something that is used to the CBN, because even backed by the CBN Act, Section 42, subsection 2 of the CBN 2007 Act.
All right, so it is lawful. It has been done before from what you're saying, but it's a larger amount and the context may be a little different. So do you see this particular situation as setting some sort of precedent for future mergers involving distressed banks?
So it depends on the level of a bank distress. If it is something that the CBN can indeed step into, support the bank in question, why not? They will definitely do it. It is part of the CBN's mandate to see if there are ways to, reduce the distress that a particular bank is facing. In fact, the circular that we even released last year on this unity and providers support did mention that the situation that is the Unity Bank is currently facing is not as bad as we saw for Heritage, which is why we're seeing them step in for Unity and not necessarily we see them step in for Heritage last time. So it depends on how distressed the bank is, and that will determine how they can either come in. And besides, Unity Bank in 2023, I think in their audited financials, they had already started to consider a number of transactions that they would do to support their capital levels, because if we look down the memory lane, what we noticed was that Unity Bank had struggled with negative equity funds for as far back as 2017, and in the process we had the financial accommodation, which I earlier mentioned from the CBN. We also had talks with the management explaining that they were considering capital raising, even when they found out that capital raising would be a bit difficult because of how the issue of negative equity funds had lingered. They started to consider a merger, and they're looking for willing entities that were going to be willing to merge with them or maybe acquire the business. So they had already started making plans way as far back as 2023. So this financial, it just means that now that we are seeing them want to merge providers, it's something they would have done back in and have already discussed and outlined the things that would support the whole transaction. And CBN, of course, is willing to provide that financial accommodation just to see this through. So I think it's something that has not always been in talk, especially with the management, because of how far back we had some of the capital issues that I mentioned earlier.
Mm-hmm. And, to have some sort of risk assessment, right? Walk us through some of the risks that could arise when we have regulatory bodies like this stretch the traditional accounting definitions to accommodate distressed institutions like Unity and Providus.
Well, truth be told, again, I would say that these are speculations that they are being stretched, because it is something that globally we would see the central banking authority in whatever jurisdiction step in if there are liquidity issues with a particular financial institution that they believe would, if allowed to fail or allowed to go south, would have a ripple effect on the entire banking sector. So we'll definitely see the regulator in that line come to step in. And in terms of risk, this is not necessarily something that I would say they're stretching, because as I said, we've done it before, and for this particular transaction, we are still awaiting public clarity from the central bank how they intend to play this out for the merged institution. So when that happens, we'll definitely know what next steps to analyze, and based on what we see, we would know what to see. However, I would add that with regards to the regulatory risks that would arise, I see little to no risk as per now until there is that further clarification that comes from the central bank with regards to this particular transaction.
And finally, when it comes to safeguards, right, what safeguards do you think should be in place to prevent the misuse? Yes, this may be some sort of exception, but in the future, do there need to be checks in place to prevent the misuse of regulatory discretion in financial reporting?
Most definitely, for every support that the central bank or the regulatory authority in this regard provides, it would see it to the letter. Seeing it to the letter would mean adequate monitoring of how the use of proceeds would pan out for the merged institution. And again, we know that the Central Bank of Nigeria is one regulator that is very strict in terms of dishing out its mandate. And if that is the case, we would not expect anything less on this particular transaction. So we would be sure that they should put in monitoring policies that would guide how this particular financial accommodation will be used to pay off the obligations of Unity Bank and support the recapitalization of these two entities. Mind you, it is a regional and national bank that is proposed to be merged. So we'll definitely see how that will pan out. If they retain a regional license, if they retain a national license, all these are checks that would be discussed in the whole transaction details, and would see how that would play out for the merged entity. So I believe there will be checks in place, and those checks would be strict to the extent that if it goes outside what the money is meant for, we'll definitely see the central bank again come in, and it is something that is beyond what they can repair. It may be a case of another heritage bank, but for the fact that they have come forward to support, it shows that they would see it into the latter and ensure that all areas with regards to the checks, with regards to monitoring, are adequately done and provided and stated and even instituted to ensure that the whole transaction is a success.
All right. And to tie things together, the question I asked when we were introducing this conversation, is this move a sign of regulatory innovation or desperation?
So it is not, I would not call it desperation, and I would not say it's an innovation, because I also mentioned that it has been done for Unity Bank before, even though that was not for a major purpose rather. But it is a case of the central bank identifying that there is something that can be salvaged here. There is a potential party that wants to be part of this transaction. I'm thinking of providers in this regard. And there is something that we can do for now to support this transaction. And that is exactly what we're seeing play out. So it is not a case of desperation, because if it was a case of desperation, if it was as bad as how we saw Heritage Bank, then it would have been a different story that we'll be telling now. But for the fact that there is a willing party that wants to be in this particular transaction, and seeing any need to raise any alarm as they did for Heritage, then it means that it's something that can actually be done based on the optics that are currently evident to them. So that is how I would describe it. It's not necessarily a desperation. In fact, it is not desperation. It is something that the CBN has done before, but not in merger context, but they have provided financial accommodation previously to banks, and it is part of their mandate.
All right, so we'll find a word for it, I'm sure, in the future. But thank you very much for your time, Nabila Mohammed, research analyst, Chapel Hill Denham.